Hello, everyone. Welcome to the fifth session of the Silicon Valley Startup Forum at KAIST. My name is Yong Pak, and I am a professor at the KAIST College of Business. It is a great pleasure and honor to be the moderator for today's session. The Silicon Valley Startup Forum, hosted by the KAIST College of Business, invites world-class scholars and experts from the startup community to gain more insights regarding the founding and growth of innovative startups. The forum has a total of 10 sessions, and today we are excited to host our fifth session. Our speaker today is Mr. Han Kim, who is the managing director and co-founder of Altos Ventures. Mr. Kim probably needs no introduction to those who are joining us from the Korean startup community. He is one of the most renowned venture capitalists in Korea and a highly respected figure among many entrepreneurs in the startup world. Throughout his professional career at Altos Ventures, he invested in many early-stage startups and helped them grow into successful companies. Many of his investments turned out to be one of the most celebrated startups and unicorns in Korea, including the likes of Coupang, 배달의 민족, TOS, 당근마켓, 직방, KRAFTON, Hyperconnect, LaundryGo, Spoon Radio, Bespin Global, and even Roblox, just to name a few. Having been a long-term investor of many well-known companies since their beginnings, today, Mr. Kim will be talking about how to be a great founder. So without further ado, please join me in welcoming today's speaker, Mr. Han Kim. Welcome, Mr. Kim.
Thank you. Thank you for the kind introduction. I've been asked to talk a little bit about what kind of founders that we typically love and work with. I think we had a chance to observe various types of founders, and some we like better than others. And we realized that there is some correlation, but not a direct correlation between the founders that we love versus the ones that succeed. So I think it's a very different notion, thinking that only the founders, the characteristics that we like are necessary traits for success, because there are, I think, many successful founders who, I don't think fit as well with us. So I'm basically going to talk a little bit about the kind of traits that we typically like. But before I think we talk about the traits that we like, I think it's a little bit easier to talk about what we don't like, just to take out some traits that we, when some founders exhibit those behaviors, we automatically typically say, oh, it's not going to work for us. One is, there are founders who rely, very much on the types of schools he or she went, what kind of job that he or she did, and very proud. And we think the person has the right to be proud of what he or she accomplished. But I think when you dwell on that too much, we think it's a red flag. We also think it's a red flag emphasizing too much about the schools that you didn't get into. So, it's basically emphasizing on irrelevant things is something that we don't like. And we also look at, some of the behaviors when founder walks into the office. Do they say hello to our assistants? If somebody brings them coffee, do they say thank you? Just the little things, the types of stuff that you do for people, that have no relevance to you, the behavior, because we think that's a very demonstrative of how you'd work with other people. And so we really look at that, fairly carefully. And in Korea, I think sometimes older people tend to look down on younger people. We worry about that. And and vice versa. So it's, basically the idea is, do people treat others with respect, even when you have no reasons to be extra nice? So I think having that out of the way, there are 3 traits that we also worry about. And it might not seem as obvious, but it's not a red flag, but it's something we worry and we try to coach the CEOs, should we invest? One is if the CEO is too nice. If the CEO is very nice to other people, we worry whether or not he or she could make a good decision, tough decisions. So that's something we worry about and we watch out for. And the other thing is if the CEO or if the founder is not too detail oriented, we worry because the founder has to be able to look at all the details, argue points, and sometimes be very much of a stickler. And if the founder doesn't do that, we worry because, I think people who know me, I really don't read any details. But then again, I'm not a founder of a startup company, but we believe the startup company founder needs to be able to do that. And so we emphasize that quite a bit. And the last thing we look at a little bit more seriously is whether or not, what kind of failures has the founder experienced? And if the founder actually was successful all his or her life, we worry. Because everybody, bar none, fails at some point in their career. And we want people who have failed before. And if they haven't failed before, it's going to come at them with a huge shock. And because of that, we really watch out for, we ask about the failures, kind of how the founder recovered, etc. But it is something that it's the people who actually realized that they are at a disadvantage and have done something about it, or have failed miserably and had to really dig down deep and had to grow up very quickly. Those are the traits that we really actually want in a founder. Some founders don't need to go through the failures to have those traits, but I think many founders, I think, eventually will need that. So to emphasize on the positives, the first thing we look for is, founder, the first thing is how smart and knowledgeable the founder is. And you don't have to be smart and knowledgeable in many things, but in that one subject area, whether or not it's on the business side, whatever problem that you are solving, how you're going about to solve it, and what you're gonna, go from there, that universe, you have to be so smart about it and knowledgeable than anyone else. And that is something that's a absolute requirement for us. And also on some founders are actually very good at talking about the vision and the problem, etc. But when you really dig down into a very detailed level, they're usually not that good. And we want the founder to be able to go from the top vision all the way down to the super details. And, one example I just wanted to note is, there's a company called Coupang, I think most of you know. It is led by a guy named Bum Kim. And, if you see him on YouTube or various videos, he is very eloquent. He describes the business, where they're going, how they're going about it in a very eloquent way, and it's very persuasive. Now, at the same time, that same person, I've known that when he had issues in warehouse, he would get down to the warehouse with maybe 5, 6 people who could help to solve various functions. And he would spend a good week sleeping in warehouses with that team in cots and working out the problems 24 hours by 7 until that problem is solved. He is that detailed, and it is just one example of a founder who could actually talk at a very eloquent level and go down to figure out why is the cost of one package being 0.01 cent more than it was the previous week. And you have to go down into that detail level to be able to do it. Most founders don't like to do that. Most founders cannot do that. But we want our founders to be able to do that. The second trait that we really look for is we want founder to be super honest. It's not just being honest about, everyday things, but it's being very honest about what your dream is, the gap between what you want the reality to be and what the reality actually is. And a lot of times, because founders are, they dream big, they want to get to places in a hurry, they sometimes forget that the reality has not really caught up to where they want the reality to be. And I think founders who are great about acknowledging it are actually, they end up being much more successful. Give you an example of Bongjin, who basically he used to be the CEO of Woowa Brothers, 배달의 민족, and he's now the chairman. I think it's been reported in much of the press that he didn't go to the best college. He didn't go to KAIST. He didn't go to Seoul National. He went to a 2-year college. And he admits it's because he did not study hard enough. He didn't apply himself when he was in high school. And therefore, he didn't get to go to a best college. And he's very honest about that reality. But he's also not bitter about it. Some people are very bitter. I didn't go to the best college, therefore I don't get the best jobs. World is not fair. He didn't sit there and say that. He basically said, look, I goofed off when I was in high school. Therefore, I didn't go to a good college. Now, in order to compete against the best college graduates, now I have to work much, much harder to make up. So he used to get up like 4, 5 a.m. and read books on various topics, from how to be a good leader to various technical topics as well. And he would talk to as many people as possible to learn. And he would read late into the nights as well. So basically, that was his way of closing the gap between the reality and where he wanted the reality to be. So he really applied himself because he was very honest with where he was. And he more than made up. So he became more knowledgeable, more capable than the very best graduates of the very best colleges. And one of the other things he did was to keep everyone honest at his company during the early years when the company was all sitting on one floor. Basically, his desk had wheels. So Bongjin used to move his desk once a week. And whichever department had issues, that's where his desk used to move to. He would just roll his desk and sit next to a bunch of designers or sit next to a bunch of engineers or marketers. Wherever the problem was, he would just sit there and work from there. And it is so that he could keep everyone honest about, hey, we're not doing a good job. I'm going to sit here. So, one of the things I just keep emphasizing the whole intellectual honesty. It's, one of the person that actually started this thing on whole intellectual honesty for me was, we call him BG. It's Chang Byung-gyu, one of the KAIST graduates, who's the chairman of KRAFTON. And when BG, and if people have read KRAFTON Way, people know how many failures the company had gone through. I mean, basically for like 10, 12 years, they did not succeed. They had multiple failures, one project after another. But BG basically said, hey, it's okay to fail, but it's not okay to fail without acknowledging, what you failed at. And so basically, if you are honest about, hey, this is what we are trying to accomplish, and assuming we fail, because failure is more likely outcome than success, what will we gain from this project? And that's the question that was always asked and talked about, discussed. And when people finished with the project, whether it's a failure or a success, they sat back and said, okay, these are 3 things I had promised to take away, and we're taking away that project, those learnings. And, that kind of honesty is something that leader has to foster within a group, and it has to come from the top. So we talked about being smart and being honest. And the third factor, there's only like 6 factors. And the third factor, it might sound odd. We want founders to be greedy. It might seem very wrong, but we want founders to be very greedy in a good way. And we want founders to dream big, want something big, accomplish, big things. And in order to do that, you have to go through some tough decisions. And, and usually one of the first decisions the founder has to go through is, and if the company starts to grow very quickly, you have to sometimes recruit people over your co-founders, you have to sometimes let go people who cannot keep up with the growth of the company. And you have to have those tough discussions with people that have supported you in those tough times to say, hey, sorry, but I can't keep you any longer within the company. And you can't do that if you're going to be very, if you're not greedy enough. And sometimes I think we try to draw out this kind of greediness from the founders, but it's an absolute necessity in order for the companies to eventually be very big. And it's not a necessity if you want to remain as a very small company, family style business. And there's usually nothing wrong with that. But the types of companies that we invest in, we want them to be a much bigger company that has more influence, could employ a lot more people, etc. Talking about Pongjin from Woowa Brothers again, when the company hit about 10 million, and the investors were talking about, hey, maybe, we could get to 20, 30 million, get 4 or 5 million in profits, and we could go public within a year or 2. So we should start thinking about going public in the Korean market. And during the meeting, I had basically said, Pongjin, I absolutely disagree. Forget going public. Forget, hitting profitability. I think you have a wonderful business that you have built. I think the first thing we have to do is make sure you get to $100 million in business. And in order to get there and to get that scale, and I think you could absolutely do it. And I think we have to do it in the fastest time possible. And Pongjin looked at me like, I can't believe Han is, being this bullish. And he called me at after the board meeting and said, Han, I'm not the right guy. I don't think I'm the right guy to take it to 100 million. I'm just very happy that we got to a 10 million. And I think you need a different CEO. And I said, Pongjin, you're one of the best I've seen observing you over, at that time, a couple of years. And this includes the CEOs in the US as well, who maybe have had more interactions with other successful CEOs. And I think you're absolutely great. So we basically told him how good he was, and we gave him a huge pep talk and told him that he is the right person to get to 100 million. Now, fast forward many years, I think last year, Woowa Brothers, they hit well over 1 billion in revenue, much more in GMV, but 1 million in revenue. And Pongjin is very excited about hitting 10 billion in revenue. He's a different person, right? So in a way, he's a very kind of, on his personal things, he demonstrates a lot of giving. He has pledged to give more than 50% of whatever he's earned, which is a lot. But in terms of what he wants to accomplish, he's learned to be very greedy, which is, I want my business to be as big as possible. And that is something you have to just ingrain into, various CEOs. And, so sometimes when, we had one of our CEOs in the travel space called me, and this is before pandemic, and said, hey, just want to let you know, I had an offer to sell the company for 200 million. And I just want to let you know, I turned it down. I hope that's okay with you. And I'm like, wow, I didn't expect the CEO to be this greedy. And it brought smiles to our faces. And we want the CEOs to not settle for a very safe exit, but also, go after something big if all the cards are there. And we don't push CEOs to be, we don't push the decisions, but if the CEOs really want to go after something very big, we fully support and are usually very happy when they do that. So the fourth characteristic is the CEOs have to be able to pull in great people. So we call them, the CEO has to be attractive in people's sense. When you meet with the founder, a lot of great people who maybe have had much better educations or work experiences, we want them to be able to say, gosh, I want to go work for her. I want to go work for him. That's the kind of, traits that the CEO has to develop. And sometimes the person has it from the beginning. Sometimes the CEOs develop that capability. And the way we get to observe is A lot of times, before we fund the company, when we look at the CEO, we say, hey, is this the type of CEO I could introduce some of my good friends or good people that I know? And would they be interested in working for the founder? And we ask that question. And if we say no, then it's a little bit tougher for us to be excited about the business, because oftentimes not all the parts of the business is functioning. And so when we take a look at the founder and say, wow, I could see bunch of my friends or colleagues get very excited by working with this person, then we get very excited as well. And after we invest, we continue to introduce the CEO to people that might want to work for him or her, or various business partners. And we always get the feedback from those people and try to figure out what they liked about the founder, what they didn't like about the founder. And we try to provide advice, and hopefully the founder's attractiveness towards external parties continues to move up. And that's something we really try to do. But sometimes, the founders do it very brute force. So I still remember, there's a company called HyperConnect, which got sold to Match earlier this year. And, there were like 3 co-founders in the company, and they needed foreign nationals to come work for them because they were doing all kinds of business outside of Korea. And a lot of them involved Middle Eastern countries, Turkey, some countries that, we had no idea what the typical protocols were. And they just went to a language school in Seoul, various programs that I think Yonsei has a very big language program. And they used to just stand outside the campus and just pass out the flyers and try to convince people to join their company. And I'm sure some students must have thought they were nuts, but they had, they just mustered up enough courage. And these are like very techie founders who are not used to talking to a lot of outside people, and they were able to do that, and they recruited a bunch of people in, and eventually 30% of the employee base became foreign nationals. And so sometimes you just have to develop that ability to attract people, and just sometimes it takes a brute force way of doing it. And sometimes it grows on founders. So we have a company called MyRealTrip. So during the pandemic, as you could just imagine, the business just dropped like a rock. And, they only had like a very handful number of developers. And so even those handful number of developers, every company was calling on them to take those developers out, because it's a bit of a war for talent. Now, during the pandemic, they managed to go from like 20 developers to well over 100 developers, because they decided, I am not going to lose out on other companies. I am going to make sure that we are strong, we are very attractive to the very best developers, and we're going to go out there and actually recruit more and very best developers. And the CEO is a very shy guy, and he just took that shyness off, worked along with the CTO, and just went out there and recruited like 100 plus developers into the company. So it is something that it's a trait that you could develop if you put your mind into it. The fifth characteristic is, I think it's something we typically won't know until after we invest. It's, you have to be brave. So what I mean by brave is the CEO has to act on certain conviction. You have to develop conviction and be able to act on it. Some CEOs are, in business, I think there's always a trade-off between risk and reward. And the CEOs, you develop enough conviction, you realize, hey, it's riskier if we don't do anything. And sometimes it's easy not to do anything if you're making money, you're growing, you're doing very well. But some CEOs, when they develop some conviction, they act on it. I'll give you three examples. One is going back to Coupang. They used to have a daily service, and they didn't sell products. So, I look at that. There were like two critical decisions that they made. One is they went from selling service to product one day, overnight. They looked at the bunch of data, and they decided, products are much more profitable for the company. We're going to start dropping service and go into products, which means, they had hundreds of people, competing at that time against Groupon and Tmon on the service things. And they dropped those and went into products right away, faster than anyone. And it was something, they looked at data, they developed conviction, and the founder decided this is what we must do. And it was risky because on the service side, which is selling coupons into restaurants and whatnot, it was a bigger part of the revenue, and decided to drop that and do that. And second thing that was a critical decision for them was they were very cash positive. After they went into selling products, although they reported losses in terms of cash flow, they were very cash positive and doing third-party sales. And then they decided to build their own warehouse, own delivery, because they wanted that they wanted the customer satisfaction to be much higher. And they decided they wanted to own the entire supply chain. And that was a huge undertaking because you needed billions of dollars to be able to do that. And that means declaring a bunch of large conglomerates as your enemy as well. And basically, they were able to do that. And, I don't know if I would have had that courage, but, with the data, the founder and rest of the management team, they were able to do it and convince the investors. So these kind of conviction and decisions cannot be pushed by the investors, but it has to be borne by the founders. And second example is going to Woowa Brothers, 배달의 민족. We used to, or Woowa Brothers, they used to charge on every order. When the consumers ordered, they used to charge like 7 to 10%, and Woowa used to charge less than Yogiyo. So the company felt good about what they used to charge. I think Woowa used to charge like 5 or 6% compared to like 10 to 15% at Yogiyo, and the entire company was like, hey, we're charging much lower. So we feel good about what we're doing to the restaurants and for the society. But the press, everybody started attacking for whatever reason, how bad this company was because you're taking away money from the merchants and whatnot. And Pongjin, one day he called and said, Han, I'm thinking about taking the commission rate to 0. And I'm like, are you kidding me? At that time, the company was doing like $20-30 million. We had just brought Goldman Sachs in as our investor. And for him to say, we're going to drop our revenue to basically 0, that was a huge undertaking. And then we sat down, understood the reasons why we ended up supporting him. But that was a huge undertaking. It's a decision you cannot make without courage. And we think the great founders are able to make those kind of decisions. And same thing, there is a company called Zigzag, which is in the fashion world. You know, we invested, after investing, I think we waited a year, and the CEO launched monetization, which is a little advertisements. And there were some complaints from the merchants. And he talked to us and said, hey, I think we could make $1 or $2 million a year, $1 or $2 million a month. But I think we're hurting the customer experience. So, you know, would it be okay if I took the advertisement down and give the money back to the merchants and work on making sure the product works much better for another year? So we won't be monetizing for another year. So can we wait one more year? I'm sure that was a very tough decision for the CEO. And when he came to us, we were like, you know, we were hoping you come to us with that idea, because we thought it was premature, but we didn't want you to make the decision with our push. We wanted you to make that decision. And he made that, decision based on data and his own conviction. And so obviously our regard for the CEO went up dramatically when he did that. The last trait that we'll talk about as what we think is a great founder is the great founders, I think, never stops learning and is somewhat insecure in a way, because you're so worried that somebody else might understand this business better, might understand the customers better. So you are basically always learning. And I think a lot of great CEOs, they probably listened or watched YouTube videos on basically on everything about the business. Similar company all around the world to any speaker that could be helpful in their industry, and all the minute details as well. So a lot of the things I think, we get to find out because oftentimes we're in dialogues with various CEOs and we ask about certain things, and we are super surprised, or I guess we shouldn't be surprised when the CEOs come back to us and say, we're doing this because of X, Y, and Z. And then we ask a question like, hey, have you thought about this? And they said, of course we did, but your suggestion makes no sense because this will cause that. And, they will explain why our idea was a stupid one. And so the CEO who are always learning, who are never secure about where they are in terms of the knowledge, in terms of quest for customer satisfaction, in terms of where the potential competitors may be, with regard to their own customers. I think those are, that's a trait that continues to, it has to stay with the CEO the entire life. And so those 6 things, like you have to be super smart, you have to be intellectually honest, you have to be greedy in a very good way, and you have to be attractive enough to be able to recruit great people into the company, and you have to make some brave decisions based on conviction, and that you should never stop learning and being secure about where you are. I think those are 6 traits that we believe make up a great founder. And, those are the traits that when we work with the founder that we try to develop in every founder that we have interactions with. So I wanted to stop there and go through a bunch of Q&As. I'm very honest about things that I really don't know. So a bunch of questions that you might ask, I might not know the answer. And I think, but other than that, I'd be happy to answer any questions. There are some questions that I cannot answer because but I'll let you know what those questions are.
Okay, thank you very much, Mr. Kim. This was a very inspiring and insightful talk, and I'm sure our audience enjoyed your talk as much as I did. I think the 6 key success factors that you mentioned in order to be a great founder applies to in any setting. So if you want to be successful in life, you have to be knowledgeable, detail-oriented, intellectually honest, be greedy or even ambitious, be attractive enough to hire people smarter than you. These are all, I think, lessons that applies to everything that we do in life. Now, you yourself co-founded Altos Ventures, correct?
Yes.
So you're a great founder as well as a venture capitalist. And going from Stanford to a big company like P&G and then becoming a venture capitalist, maybe it will help the audience understand how you came up with this philosophy or how you live by this philosophy yourself as a founder, if you could tell us how you became a venture capitalist in the first place. And you also have a military background too, right?
Yeah, I think we have, basically there's a YouTube video on 3 of us at part of the Stanford thing that talks about our history and how we, came about. So I would just encourage you to watch that. Just briefly, I went to West Point as an undergrad, so I served 5 years in the military afterwards. 2 of those 5 years were in Korea as a Corps of Engineers officer, and 3 at the headquarters of U.S. Corps of Engineers. And then I did a couple of years at Stanford for business school. But the P&G was the summer years, a summer job between first and second year. And so I guess it's not like I properly worked there. I saw a glimpse of a large, successful company, which reminded me very much of the U.S. Army. So I said, okay, this is why, this is the organization I left, and it's probably not a good fit for me. And I worked a little bit at Booz Allen as well. Got to watch, some large companies as a consultant, and that was an interesting experience. But our start at venture capital was totally accidental, and our first 10 years were just a bunch of failures. So we had, we had, a few successes, but, we had way more failures. And so during the failures, I think we realized what we didn't want to do, what kind of founders we didn't want to partner with. And so that formed, I think, the crux of our thinking.
All right, great. Thank you. So you also mentioned that, good founders, they should never stop learning. So how much can founders develop new skills or internalize these new skills as opposed to hiring or attracting great hires and complement the weaknesses the founders have? What's your experience on these?
So I think it's certain personality traits are very hard to change. We think it's Oftentimes when we talk about it, if one founder is weak versus another, we try to, make sure the founder entity, we call it co-founders or the executive level, you have certain personalities that balance each other out. So as a whole, it becomes more of a good traits as a team rather than a person. But whoever the main founder, if the founder is great at one thing, we try to at least accentuate that rather than trying to fix something the founder is not great at. We're like, okay, you're already, 30 years old, 40 years old. We're just not going to change that trait. So just, we say, just make sure you have that trait as your weakness. But since you're really good in this one area, let's just make sure you become great in that area, right? And then you basically hire some other people that could help on the weaker parts. But a lot of times though, I think the thing that comes to mind is some founders are great at, better at big picture versus details. For whatever reason, we tend to like people who could actually do details, who could get down to the details and be able to explain stuff, not necessarily somebody who could explain the big vision. And sometimes every once in a while, we run into founders who could do both, but oftentimes we don't invest in founders who could just do the vision. But other venture firms like the other way, right? And because sometimes you could argue it's easier to hire people who could do the details, but we're more in the mindset of, we like the founders, especially the techie founders who could do the blocking and tackling. And the vision part comes in if you could actually survive for the first couple of years. So we tend to not emphasize that as much.
Okay, thank you very much. That's very insightful. And I'm sure, other VCs have different preferences. But yeah, so let me ask you one more question before I open up the floor to the audience. And the question is, every now and then you will find the founder that you believed in is not the right guy for this business. Do you tend to give up on the business, or do you tend to replace the CEO with someone else? I know it's a tough question. It's just a very extreme, but
it's a tough question. Yeah. In our first 10 years, we used to replace the CEO, but we've had more failures back then. So what we ended up doing, saying to ourselves was, and this is now like mid to late 2000, we said, we think we could replace the founder and grow the business, but we've had some bad luck doing that. So either we have bad luck or that doesn't work, at least for us. Maybe we're finding bad people to replace the CEOs. So regardless, we shouldn't be looking for new people. So our tendency is now, whoever we invest in, that's the person we're betting on. And if the business doesn't flourish for whatever reason, then our stance is we're not going to replace the CEO. We're going to go down with the business, because I think the chances are we're going to go down anyway. Now, there are some exceptions, right? So I think in venture capital business, maybe life in general, there's no absolute rules. And we've done some CEO changes regardless of that. And sometimes it's due to some unfortunate circumstances. Sometimes it's, it could be due to the CEO saying, hey, I want to, I'm tired, I want to quit. So that's another, and we can't sell the company for whatever reason. And so we have to do it. But we don't think about replacing the CEO proactively. Before we bet on the founder, we have to ask ourselves, do we believe in this founder? Can we work with this founder for the next 10 years? And if we don't think we could, then we're like, let's not even invest, right? Let's not go through the pain of looking for a CEO. So that's more of us than others. So more Silicon Valley firms, I think, they tend to be fairly active on replacing the CEOs. In Korea, it gets a little murkier. So I think in Korea, you almost never replace the CEO. So for us, our philosophy works pretty well with our investments in Korea.
Sounds great. I think that's a very strong, encouraging signal to all the future entrepreneurs joining us today. So first of all, let me open up the floor to some of the questions that we received before our talk. So let me give Mr. Lee Jong-hee a chance to talk about his question to you. Okay.
Hi. I would like to know, I got some questions, and as you may know, there are a lot of Korean startup support organizations in public sector here in South Korea, like the Center for Creative Economy and Innovations. And my question is, what should the Korean startup support organization focus on the most to help innovative startup enter the global market, particularly US market? And what are the most effective ways you think?
Oh, it's a tough question because I don't know, but it's tough because I think some parts of I know there is a tremendous desire to help Korean companies to do well in the US, to go out and do well. But for all the practical things, so on the business side, but the real barriers is actually not the companies, but it's the system itself. I think it's tough because when a Korean company goes out and does business in the US, if you don't turn it into a US company, then it's hard to recruit people because the most US personnel, they don't want to take stocks in a Korean company. And I don't know if as a Korean company, you could provide options to non-Koreans. So it's kind of, or the other thing is you could set up a US entity. Then you cannot get funding from a lot of the Korean VCs that understands the company very well. So there's like the system-wise, something needs to get fixed because, and without like the very basic thing getting fixed, I think it's really tough. And if you turn it into a US company, then the Korean government typically sees it as, oh, it's a US company, therefore I can't really help them. Right. Then it's, for the founders don't really care whether or not it's a US company called Korean company, US company. They just want a structure in which they can hire good people, reward good people, and not get caught up with all kinds of paperwork. Right. And I think that's what the founders really want. And a lot of good companies come out of these programs. They go out and pitch, and sometimes the VCs get interested. And almost always the conversations break down because of the reasons I just outlined. And I don't know how to fix that.
Thank you very much indeed. Some other time in the future, well, I would like to have a chance to talk over the phone or visit your office. And,
Sure.
Okay, cheers. Thank you very much indeed.
Okay, thank you very much. Next up is Tae Won-soo. He will ask you directly what his question is about.
Can't hear you.
Tae Won-soo, I think you're muted.
Yeah. All right. Thanks for the great talk. I've actually been to Altos Ventures headquarters when I was an undergraduate with people
Okay.
from Korea University. It's around 2014. My question is, I don't know if you have met startup people from the education sector. So Enuma is an example. They have products like To Do Math, To Do English. And so if a child has an electronic device, he or she can get a good education, something like that. So from the VC's viewpoint, of course, the most important aspect is how much you can get in return. Except that, what are the most important, for example, STEM education specific factors that you would care about before you invest to a company, to a startup company?
So you're asking specifically about the education sector.
Yes.
So I mean we've actually, so I have a couple of, I think, theories, and I don't know if my other partners would agree with me in that when we look at education, I think about it as two different things. One is it's something, I guess three different things. One is whether it's a technology service that helps or complements the actual learning institutions that's set up by the government, right? So which is your typical primary school, middle school, high school, colleges, right? So that's whatever that is, it's a technology that supports that. And then there is a alternative. The second part of the education, it's the alternative thing. Whatever the mainstream cannot do or are not doing well, you're using alternative method or service to help on the education. So and when you take the alternatives into a adult sector where there is no formal government-led efforts, then that's I would put it in the third category. And the reason why I sort of segregate that is sometimes, we believe, hey, there's a great new technology that comes out, now you have, some people would say you don't even need schools. You got computers, you got great, professors all around the world. You should be able to get, they should be able to teach as many people as possible, etc. Now, I don't actually, while I believe it, I don't think it's going to happen. The reason is, it's a very simple thing, is I think every government wants to control the education. And and when you go up against governments, it's not an easy task, right? And the education is something you could argue it's a responsibility of each government to make sure their citizens are properly educated, and they set up the program, and there's enough infrastructure that's already in place. Trying to displace that, I think, as a company, I think it's a bit of a suicidal thing. And I think once you start endangering that existing infrastructure, I think you're just going to get slapped. And I think that's what happened in China. It'll happened in just about any other country. So setting that aside, now, I do think there are a lot of interesting things happening in education for all the things that you mentioned. And I think you have to think about it as it could be a very complementary thing to whatever that exists. And that's how you have to view it. And if, so we've actually, we have investments in companies like Quizlet, which is in the US, which serves, global audience. Basically, it's like the memo pads that people use to remember certain things and lesson plans, etc., to help the teachers. In Korea, we also invested in a couple of interesting, companies in what we call, it's helping both the corporates and universities to teach, not just programming, but a whole bunch of other things as well. So we invested in a company called Analyst, which works with colleges. It actually works at KAIST.
Right.
It teaches, yeah. And then, we're taking a look at like some adult education in terms of, in order to keep up, as I think a lot of adults, especially if they end up with free time, with this, I think some adults will actually end up taking part-time jobs, or they want to develop new set of skills. And, there has to be some interesting places where they develop new set of skills. And I'm sure there are, a bunch of startup companies that are trying to address that. And we're also, quite interested in finding something there as well. So, obviously, I think education sector is important. I just don't think it's going to displace current schools just because, not because it doesn't have capability to do so, but it's because, that's a responsibility of every government. And you just can't take that away.
So then so it'll be a good thing if a company can give some guidance to the education led by the government.
Yeah,
it'll be a nice thing, right?
Yeah.
All right. Thank you.
Thank you.
All right, thank you for the insightful question. I think the educational sector also needs some innovation that could complement the traditional system as well, no doubt. Okay. So while we were going over these questions, there were some questions uploaded on the YouTube chat window. So let me read some of these questions that just came in. And I apologize in advance if I have to rephrase some of these questions. The first one is, you talked about the great leader, but what do you think a great followership is?
Oh, I think I think typically great leaders are great followers as well. I mean, the great follower doesn't mean that you obey everything, you agree on everything. I think great follower should be able to voice his or her opinion on things, and if you develop conviction, you have to be you have to make sure you voice that out, because that's what great leaders want from all the great followers. Is you want to make sure you get honest feedback, honest thoughts on various matters, and hear it out. Now, one thing that's very different is the great followers, once all the, you may have your own perspective, and you may think you're right, and you may want an option A to be selected. But as a group, if the group decides to select option C, the great follower should be able to say, okay, I've said my piece. I've reasoned why, but I don't have the perspective of other people. Therefore, as a group, if the leader decides that option C is the right answer, I'm going to execute on option C. And that's what the great followers should do. So you could disagree but once the decision is made, you have to execute as if that was your own idea.
Okay, thank you very much. The second question is, what are the top 3 most promising fields in the industry at the moment?
I don't know. Other than tech, I think you could argue technology is changing a lot of things in a hurry. So for us, as a VC, most people ask us, even our investors ask us, "Hey, Han, so what's the industry are you guys most excited about?" Because, what happened in China is all the consumer marketplaces got done, some interesting e-commerce opportunities happened. And now in China, all the now AI opportunities as well as the software opportunities are happening. So is Korea going to, follow something similar? In the US, it's, bunch of the Bitcoin related opportunities, all the blockchain technologies. But we actually don't look at the industries and say, this is the industry we're gonna focus on. What we typically, so I'm not giving you a straight answer. So it's just because the honest answer is we don't really know. We don't really care as much in terms of the most attractive sectors. What we care is we care about whether or not, we find some smart entrepreneur who cares deeply about solving a problem and making a company out of it. And even if it's the dullest, unattractive sector, and if the founder is able to prove to us why that is a very difficult, interesting problem, and it could become a very valuable company, if we could be convinced of that, for us, that's the most attractive thing. And we spend our days just listening to, a bunch of interesting people to, talk about their dreams, what they want to do. And sometimes we get excited by it, sometimes we don't, but we never get excited about a particular sector. So I know, today, blockchain is hot, blockchain, NFT, games are hot. I think in Korea, software companies are hot, but at the same time, it's not any better than, maybe it could be another e-commerce company that could catch our attention versus a NFT game company. So, I think it's dangerous as a investor or the founder to focus on a sector because you think it's going to be hot. I think you want to focus on something because it's near and dear to your heart. It's what the problem is, and you have this urgency to solve that problem.
Okay, so thank you for sharing your honest view about your investments. The third question that we have from the live chat window is, could you explain the investment decision-making process at Altos Ventures? I want to understand how the process and system in Altos supports the investment philosophy you just explained today.
So it's we don't have a set process. We have a you know we it's a very informal process. You know, first we try to understand what the founder wants to do, has done, and because if we understand what the founder has done, then it's a little bit easier for us to draw the line and say, okay, this is what the founder is capable of doing, potentially capable of doing. And we say, that's the leap of faith part. And we could either believe it or not believe it. And then we say, okay, the problem in itself, do we think it's large enough, for us? And, sometimes we don't know. We could say, I don't know. And everyone has different opinions. And we go through those debates internally. And sometimes we go through the debates on Slack. Sometimes it's, it's over the phone. But it's a constant chatter. It's not like we have a company, you present in front of a bunch of people and they say magically, say yay or nay. It's once we find something interesting, we float it up. Sometimes there's a negative reaction. Sometimes it's a positive reaction. You want either negative or positive reaction. No reaction means there's absolutely no interest. And so that's how we typically process companies. And there's no set deadline. Sometimes we latch onto something. Maybe it's a company in a sector that we have met different types of companies. So maybe a bunch of us are a little bit more knowledgeable. Then the decision gets made very quickly. Then it's like, wow, they ask, everyone asks different types of questions because we understand different metrics for other companies. And we're like, okay, at that, I think that's a very interesting thing. Let's spend a little bit more time on it. And if one person feels very passionately about it, then typically the investment gets made. But like now, all of us, we've been working with each other for such a long time. We sort of know, like, I really like it, but I just will have a tough time convincing my partners. Then the question is, okay, how hard do I really want to work on this investment to make a case? But sometimes other partners may understand the business a lot better. And so that's why there's often a lot of internal communication on an investment. So the typical length could be 1 day to a couple of months. So the less we know, it takes longer. So some businesses, some people come to us with let's say chips or hardware. We don't know. So we just admit we don't know. But if we think it's interesting, then we're like, maybe if we could spend some time on it to see if we could actually become knowledgeable. And we spend time on it when we say, no, more we learn, more we realize we don't know, then that's when we tell the founder, look, we don't really know. So we're not the right investors for you, right? So, we are usually pretty honest about those kind of judgments. So I guess the length of time, it's 1 day to a few months. Sometimes it could take years. And in terms of the process, it's a lot of chatter within Altos. And when we get serious, we typically interview all the executives in the company, if not, more of the company. And we do a bunch of reference calls to understand a little bit more about the founding team. And so that's sort of the typical makeup. And we look at a lot of data, if there is data, the customer data, we interview customers, etc. So because we like to understand the business to do a couple of things. One is, do we develop a conviction to want to invest in? Second, once we invest in, what are all the things we could do to help? So we become a very valuable partner for the company. So, and if we don't feel good about either, then we would typically not invest.
Okay. Well, thank you very much. There's also a follow-up question related to that, because I'm assuming that, after a lengthy process, there are some cases that you did not invest, just like you said. So the question is, can you talk more about the most regretful case for not investing?
So more recently, we did not invest in Stanford, which is a company I think a lot of people know. And I've known Dongxin for, many years. He came to us and said, it'll be great if Altos takes a look at it. We took a look at it in the beginning, and I think some of our companies was using the product. And so we took a look at it. It's just I think it was a little early, and while we invest in much earlier stage companies in Korea, in the US, at that time we tended towards slightly later stage companies in Korea. So I think we said, no, we don't, it's a little too early. So, we passed. And then the real round happened. When the real round happened, I think we talked with almost every company. But interestingly, a couple of companies said, hey, it's a great functionality, but at some point we're going to build our own. So it gave us, it gave us a pause in terms of, maybe you could sell to a bunch of companies, but as the price point moves up, maybe it's something that each company will build on their own. And it came from like two of our portfolio companies. So we were debating, and, of course, Sandberg was saying, there's no way, because we're going to keep improving on functionality, etc. And I think at the end of the day, because of that reference, there was a lot more debate within the partnership, and we still went ahead and said we'd like to make an offer to invest, but it was significantly below another fund that came in, and they were also a very, very good firm. We know them very well. They were, and on top of that, they were much, they basically got there before we did, had a lot more conviction than we did. And I'm sure it showed, and, so they went with that company, and so we missed it. Now, so we wish them well and whatnot. And our companies who said they were going to build their own, they still haven't built it. So it was we should have looked into the comment a little bit more, asked smarter questions, but we didn't. So it's definitely a miss, and it's, but we use that as our own learning.
Well, thank you for the honest answer. The next question is there anything a non-IT based person should keep in mind when starting an IT-based startup?
I think you want to develop friends who are in IT, because I think a lot of things are non-IT. We have investments in cosmetics. We have investments in a beer company. We have an investment in the hangover drink company. So a lot of stuff, it's not I don't know if you could call it IT, but one thing that's common is in order for the consumers to get to know your product or services, in order to reach them, you need somebody that's well-versed in IT, who understands how to reach those customers. What techniques do you need to do? Maybe you have to develop, so you do have to have enough people around you to deliver non-IT product to the end customers.
Okay, thank you very much.
And I would watch YouTube videos all day long on how somebody does certain things. It could be a technical lecture, it could be a product lecture. It's amazing how much you can learn.
And I think nowadays we see a lot of non-techie founders attracting a lot of these IT engineers and still being successful with their IT-based startup. So there are many ways to succeed in startups and entrepreneurship. So
yes.
I totally agree with that. And I think this speaks to one of the founders' ability that you mentioned, which is the ability to attract the right kind of people. So as long as they have that kind of skill, I think there could be other ways to run a good, successful IT-based startup. Okay, so the next question is the primary aim of a startup always to maximize for profit to keep existing and potential investors? Is it practical or possible to create a solution that balances profitability with a goal?
Oh, I think I know what that means.
Yeah.
I think different people have different answers, but the way we think how the company should be run is actually we don't encourage companies to maximize on profits. We don't encourage them to maximize on revenues even. Like, we like to see both grow, but I think what we want to maximize is the company's ability to grow both the revenue and the profit over a very, very long run. And in order to be able to do that, if you maximize on short term, I think you can't really do that. What I mean by that is, I think you have to be fair to all parties. You have to be fair to your customers, and you have to be very fair to all the employees that you work with, and you have to be fair to the shareholders. So all those three things have to be in balance. So in order to maximize the profit only, you could gouge on your customers, you could push down your employees' wages, and you could maximize profits, but we don't think you could do that for 20, 30 years in a row. Or if you maximize on revenue, then you can't really sustain like the decade plus long growth. So you have to pay your people well, you have to treat them really well, and you have to serve customers well, which means maybe not charging the maximum price even when you could. And when you're able to, and you work with business partners, you give them a fair share. And when you're able to do that, and you become a company that's known for fairness, and I think that's when that company could sustain growth for many decades. And we want to be associated with companies eventually, like hopefully some of our companies could live on 30, 40, 50 years, long after we're gone. And, and to exist as a part of society, that's the only way I think the company should be able to flourish for a long time.
That's very insightful. And I think, balancing the short-term, long-term goals and building a sustainable business model should be one of the primary goals of any entrepreneurs, rather than just focusing on short-term profit maximization. So yes, we definitely need to take the interest of all shareholders involved in the business model into account. But let me ask a follow-up question to that. Whenever we see an innovative business model introduced to the world, there may be some, I guess, people excluded from the benefit, or losers from the traditional businesses that are nonetheless affected by these innovative businesses. You could take Uber, for example, Airbnb, for example. So how should the founders take those stakeholders into account in building their business model so that it becomes more, sustainable, like you just said?
I don't know. I mean, I think it's two different things. As a business, I think it's we have a society that's based on fair competition, and I think it is a fair competition, and where I think as a society you had given a certain sector a monopoly over some business, and then all of a sudden monopoly goes away. That organization doesn't know how to compete, so they get decimated. And in terms of, so during that process, people get hurt, and it's I think, but our society is built on fair competition, or it should be built on, or we promise that we will build on fair competition, and those things happen. But at the same time, that's why we have government, and we have the ability to re-educate people. We have the ability to, hopefully find people who get dislocated from their jobs, a new career, new jobs, new livelihood, etc. And I think it's certainly better if the companies who are, are actually, who ends up winning in that, contribute somewhat. It could be from the companies, I don't know, and that's where I think it gets dangerous. I think it's more of a nice gesture on the company's part, but I think it's very dangerous for the government to mandate the company to contribute to that, because I think that's a burden that the entire society has to bear, because that's the rule that we set up as a society. So we need to bear that. And, it comes in form of tax, various other measures. And so that certain amount of money has to go towards those people. But I think a lot of times, we blame it on, we put the responsibility on a particular company that does it. And that's probably not fair, because, that company did not set up the rules of competition. So that's kind of, and I think as a founder, if you make great wealth and it came at an expense of some, and, they could do that on their own, but it should totally be voluntary.
Thank you very much. I think that's a great point. So the next question that we have in the chat window is, first of all, great talk. Any advice for KAIST graduate students who may have great startup ideas, but not really finding like-minded people, since after all, it's primarily an engineering school and not a business school? Well, we do have a business school here, but in Seoul, but we have a bigger engineering school in Daejeon, and we have great talent in Daejeon. So I guess this question is coming from Daejeon.
So I think, as a, if you have a burning idea that you have to go try out, I would say go do it. At the same time, if it's not something that you feel is big enough to be actionable, then I think it's almost always better to join a startup company or a company where you learn how to work with different people. So I think typically, one thing I noticed in Korea, especially, those that go to great schools like KAIST, is they've done well all their lives. You haven't really experienced a whole lot of failures in lives. So, and you're working always with bright students. So you go to some company or where not everyone is bright, where not everyone is as talented as you are, not everyone is as like-minded as you are, could come from various walks of life, better or worse. And just having the experience of working with various personalities and sometimes being energized by other people, I think it's a neat experience. And that's something, even if you've, found the company later on, it will serve very well to create a successful company. Because, when you create companies, not everyone's a, superstar developer. Some people, have to do, menial tasks, and you want those people to be very excited about doing it, and they serve a very important role. And you want to know how to interact with those people as well. So oftentimes I'm like, hey, go even like work at a big, retailer. It's kind of like you go work at eMart and just learn how to work with people. And just do that for 6 months and you'll do well in life.
Okay, so I think that's a great advice for our KAIST students. We just need to have some experience, in different aspects. And I think that's great. So the next question is for you. You mentioned the first 10 years were full of failure, and afterwards it has been quite successful. So lastly, I would like to ask Altos' vision in the next 10 years.
We don't really, talk about a particular vision. Our vision is very simple. We want our invested companies to be, as great as possible. That's it. And our vision is to be a very supportive, partner in their endeavors. We're not out to make Altos great. We're out to make our invested companies great. So I think that's a very different thing. So you won't hear us taking Altos public or anything like that. It's like, for us, it's what matters is our companies, and our lives revolve around our companies. And sometimes, when they feel pain, we feel it. And, when they feel some joys, they share it with us. So we get happy in those days. But sometimes it comes, right, in doses. But we are all about our companies, period. So our vision, so what we really think about is how can we better support the companies that we fund? And so whether, it means having enough money to invest in those companies, we try to figure out the most efficient way to do that. Having a structure to be able to partner with those companies, we do that. Knowing a lot of other great investment firms to be helpful, we do that. Sometimes it means, we should also know public investors as well, so that they support our companies in the public markets as well. So we go from like how to support companies when there are 3, 4, 5 people to after they become public companies, because that we have positions in throughout that spectrum, and it means very little what, Altos. So we never emphasize, how big we want to be, what we want to be. It doesn't matter.
So I guess relatedly, I want to follow up on that. So in the last several weeks, what keeps you awake at night? And alternatively, what makes you jump out of bed every morning these days?
Every morning, we have, it's depending on where you are, but now that I am in European time zone, I wake up and there's usually, tons of messages from both the US side and the Korea side. And it's actually, it's fun. I think most of us, if not all of us at Altos, we are actually, it's fun to be spending time with the CEOs that we back. Oftentimes, some discussions are not the most joyful discussions, but it's what we want to do, what we live to do. And every day, sometimes it's like, God, I don't have an answer, and no one has an answer. So we have to tell the founder, God, we don't have an answer, and I don't know. But sometimes that's what founder needs to hear, that we don't have an answer, so, it's kind of like, okay, if no one else has an answer, at least I'm not the only one that doesn't have an answer. So they regain confidence that way. But, it's our ability to work with the CEOs that, we chose to work with. That's the, best thing about work. And, that's the thing, that's why we get up very excited every day at the prospect of, talking with potential new founders that we're going to back, as well as working through everyday issues with the current set of founders. I don't know if I could ask for any better job.
Well, that seems like a very, very nice job. But at the same time, there might be some things that, keeps you from going to sleep at night, or something that you worry about these days. Anything in particular recently?
So we worry if the founders don't worry, but most of our founders do worry. So
I mean, worrying about their own startups,
they are
and not being greedy enough.
Yes, because most founders are obsessed with their business, and that's our trick. If we want founders who are just obsessed with their business, where they're going, they're worried about it. And if we sense that they're not worried, only then we get worried.
Well, thank you. There's one more question that I want to go over that was submitted before our talk, and I think you already went over all of these questions that was submitted. But there's this one question that says, is a founder not involved in doing the R&D work himself or herself? So, for example, is the founder's job primarily managerial in nature, or does the founder utilize his or her technical knowledge?
I think it varies. Some founders are super technical. They could do all of it. Some founders know enough to be dangerous. Some founders don't know as much, but I think most founders, they do know their product in a pretty intricately. I think, whether or not they're technical is a different thing, but I think the product itself, whether it's the service or the actual product, the founder has to know better than anyone else. That's kind of how, that's how we see it. It may not have to know how it's built in a very deep technical sense, but the founder has to know whether or not the product is any good. Because you could measure, let's say if you have a site and it takes 2 seconds to load versus half a second. Founders should be able to tell the difference between a site that loads in 2 seconds versus half a second, because you could feel it. And founders should know whether or not consumers are spending 5 minutes on it versus 20 minutes on it. And you have to know, what the difference is. Is there a difference in customers themselves, or differences in the way the navigation is set up, UI is set up, all that. So you have to be able to drill into that and obsess over it.
Okay, sounds great. So there are some common questions that we ask all of our speakers. Mm-hmm. So let me start with the first one. We are now almost 2 years into a global pandemic due to COVID-19. In your opinion, what was the impact of the pandemic on science and technology, and maybe in business practices in general, or business investment, I guess?
So I think there are sectors that that got hampered by pandemic, but I think IT in general, I think was it's gotten a huge boost during pandemic. I think people are accepting various technologies more, such as Zoom. I think there's a lot of behavioral changes. It was going to take maybe 10 years. I think, pandemic, with the 2 years of pandemic, I think people have already switched behaviors. That's going to be tough to go back on. So all the things I think that would have taken longer just happened within a shorter period of time. Some will regress a little bit, but I think the eventuality has happened, and it will continue to happen even after the pandemic's gone.
So do you think some of this will revert back to normal while others are using this new technology, or do you think there's going to be like a seismic shift that everyone will stay with their current behavioral change?
Yeah, I don't think it's going to go back to normal. I was talking to some people about the fact that even my daughter, who's been working for like 2 years, and she's like, I don't want to go to the office every day, right? And I'm like, what do you mean you don't want to go back to the office every day? It's like, but it's interesting. So now as a leader of an organization, you have to think, just because now, even after pandemic, the shift in behavior of people has happened. It's like, why do I need to be in the office every day when I could work just as effectively? So now you have to think about giving people a real reason to be at work, other than to say, I want to watch people working, right? Because I suspect people have worked harder in their homes than, in actual workplaces. Now, so people are like, it's not like I work any harder when I come to work. I'm working harder at home, but so why are you forcing me to come to the company? So now you have to give everyone a sort of, when they come to work, it should be a lot more satisfying option than staying at home, which means, you have to have other great colleagues at work. You should be stimulated when you're at work. You know, you should enjoy the discussion, the live chit chats that you get. If you can actually foster that kind of an environment, I think you're going to lose people, and your best people will be taken away by sort of the competitors who are able to provide that kind of work environment. That's just my take. And I think it's here to stay. And, you know, I actually think it's like maybe 3 days at work could happen. I think people maybe, I don't know if we're going to have like real set hours other than, you know, certain sectors. Maybe people meet every once in a while. I don't know. I think it's different companies will have various, you know, combinations, but it'll be interesting to see who does what. Our companies, everybody's a little bit different, but, you know, but if you are a company and you want people to come physically, you give no reason for people to show up physically other than to mandate for them to come physically, then I think you have no chance of keeping great people. So that's kind of my prediction.
And I think that, you know, we see that in the classroom as well. These days, a lot of these students, the young students, see this as a new normal, and they start to question, why do we have to go to school every day? Because Zoom is effective enough. So, you know, this has, you know, deep implications about how we utilize real estate, how we, you know, utilize the resources here, about the education business model itself and the curriculum. And I think that kind of behavioral change will also change how we utilize resources in businesses, as well as the, you know, business practices, like you just said. But no one knows the answer, but we'll certainly figure this out as we go along. But we certainly need to change our business model as well. So I think we covered all the questions that's been raised. So I know you are in a different time zone right now, so I have to, you know, express my deepest gratitude for sparing your time and insight with us and the KAIST community and all of our students who are checking in on YouTube. It was definitely inspiring, and it was definitely a privilege to be a moderator for today's session. So,
thank you very much for having me.
All right, thank you very much. Okay, and that's all for today.
Thank you.
Thank you.
Thank you.